Is it finally time? That's the question that stock market traders and investors are realistically thinking about, like you and me. Latecomers have now come into the 40% tech stock rally, but are they arriving too late? Today, we talk about the fear of being fired. What do mutual funds fear more than a sell-off in the markets? We'll discuss that, along with our thoughts on JP Morgan's most recent comments. Basically, retail traders went all in last week and the last 2 weeks with a 2 standard deviation over 12-month average increased buy zone. When markets sell off, everybody's buying calls. That is a difference that we have not seen in quite some time. Goldman Sachs also have stated that the last 9 of 10 days, hedge funds have been selling the markets. We've got a market that is now closed outside the Bollinger and rejected, a technical signal that could mean mean reversion is coming. And of course, we need to look underneath the hood. Certain areas of the market have been selling off more than others. What does that mean moving forward? Let's get into it, guys. Talk about everything to do with markets for the week ahead. Well, welcome back, everybody, to the Daily Show, where we talk about macro, leading indicators, the options flow, and of course, the hottest charts for the week ahead. If you like trading, investing, or even scalping markets, make sure to stick around as we're covering stocks, commodities, and cryptos today. Let's talk about sentiment surveys. These are coming in from advisors and basically retail investors and traders like you and I. What are they thinking? Everyone's turned bullish. Over the last 3 weeks, we've seen a shift that we haven't seen for over 12 months, a super bull shift with sentiment for the next 6 months. This is something that we can stack now with potentially problems in this rally market, as it has been moving what we call further away from mean reversion. We can also get some information from Goldman Sachs message book recently, which is their prime book. And you can see here that they're saying US equities have witnessed aggressive selling. Remember, 9 of the last 10 days, leading funds to hit record low underweight positions. Now, these are a little bit different to some of the mutual funds that we've seen having to go from the sidelines in recently. But this shift in sentiment could have far-reaching implications. If you're interested in seeing more of those types of things, make sure to follow us on Twitter. Links in the description down below. So let's take a look at the data read coming forward. Now, we know that we hit an 80% likelihood of a sell last week, and it happened. Now, when we have a sell in the June OPEX week, what tends to happen over the next 3 weeks? Well, for the bulls, it's good news. As we move into demand areas from the NASDAQ, for the Russell, for the S&P and the Dow, then at the same time, we have a 3-week 16 up, 1 down stat read average. Now, of course, this can be broken. Stats are stats. That's all they are. But at the same time, it is quite bullish. What we're looking for if you're a bear is actually a break to a new low. And did we see that through the Friday trade? Surprisingly not. We came in with a big gap down. We rallied to fill, but we didn't manage to get a new low. That will be one of the most important bear factors and could actually implement some type of swing trade going over the next month should it occur. For the bulls, though, your stats are looking very, very solid in times like this. Let's move over now to smart money versus dumb money. We've got the confidence spread so far out now that we can start to look at this chart. We took a look at it on our Friday video, but as you can see here, we've got this massive switch in the ability of smart money saying, I don't like this market price, and dumb money being us, the retail traders, saying, I love this market price, look how good that is. When we get these shifts, it does have a statistical advantage, generally, of course, in the favor of markets returning back to something like mean reversion. Should we pay attention to it? It is one of the factors that you could use in these situations. Bull-bear spread due to these particular reasons. You can see the big shift here. We've gone from being hugely bearish for a long period of time to suddenly being on the positive side of the bull-bear spread. Again, it's a period where if you're a contrarian indicator trader, you might be saying, well, maybe we're a little bit too hot in these markets. And that's certainly what JP Morgan's one of their favorite indicators anyway, is saying. The squeeze sentiment indicator, the 99th percentile last week. And we've seen a little bit of a sell-off in the market since that point. Here's the Jan squeeze. Here are some of the other events that have happened over time. And you can see here the GME and, of course, the pandemic highs as well. All of these squeezes were extremely good turn events, and we just saw one, the 99th percentile, a pretty rare read at the same point. Equity risk premium, we continue to bring up. This is, of course, Mike Wilson from Morgan Stanley's big call on 2023 that unfortunately is not working out for him so far. But he's basically saying that ERP which is a very important factor when it comes to specifically, I believe, the Q3 earnings, because that's where it'll show up if it's going to, is getting dangerously low. In fact, it's going back into periods where we saw explosions in it due to rebalancing of asset prices. Now, could ERP go lower? Of course, during the late 90s into the early 2000s, it certainly did. So it's only one read along with the others, something to be paying some attention to. So with all of these things, other than the data saying that things could go up, at the same point, we need to understand that we have a whole bunch of overbought indicators. The put-call ratio is running hot. That basically means that calls are everywhere in this market. And while a lot of them are set up on the shorter dates, they're starting to become longer dated as well, allowing for the market to potentially take profit from those points. As an investor, if you're watching this channel, do we like these prices? The answer is really not really. I mean, 18.6 at the moment is the forward PE. As I've said for many times, 16.8 is the average. If you can buy the average or below, I like to buy 15.5s just as a reading. Then that is a very good point over time to be able to usually get into the market. Could you do that again? I'm sure it will come. The question is, are you patient enough to wait for that type of opportunity? Let's move over to Treasury yield curve inversion. Has that been deepening? The answer is yes. Does that mean that we're about to see a recession? The answer is generally no. Until this actually goes back above the zero line, historically, we don't usually see a recession getting called. At the moment, we'll be interested in the next couple of weeks as we see jobs numbers come out for the US again in July. And that will really show us whether the market is starting to actually feel the brunt of the Federal Reserve's rate rises. And speaking of rate rises, there could be more to come. We saw the UK, so basically the banks in the UK literally get raised by 50 basis points last week. That's a huge, big deal. We saw, of course, Canada, the Bank of Canada going another 25, and the bank here in Australia, for me, going another 25 basis points as well. So all of these big central banks have actually begun a new raising cycle, effectively the second run. Now, that could mean that we've got another 50 or even 75 basis points from the Fed moving forward, should they not see the right signs of slowdown in the economy. Speaking of slowdown, someone got massively leveraged last week and the week before, and this has, of course, led into a huge decline in leveraged money in the markets towards the short side. I believe someone got absolutely walloped the week before. These market reads generally come out on Tuesday, and you can see here that the massive net hedge shorts came off huge. And I think that's someone just getting wiped. And of course, that can be symptomatic of a topping in markets where we see somebody lose all of their money or at least get wiped. The pain's too big. Remember, the pain trade is often what things were happening. And someone has lost a big position and they've basically been forced to drop back on that. Why are we a little bit concerned over this time? Well, of course, we do have the data saying that markets could go up over the next couple of weeks, which is historically what happens. Basically, what happens is you get a sell-off, then you get a rally into the back of July, somewhere around the back last week or so of July, we start to see a sell-off, and August and September are usually very weak periods of time, especially in pre-election years and, of course, around those earnings. So at the same period of time, we tend to see volume lulls due to the summer in the US and the Northern Hemisphere, and in general, we get a lot of sideways action in the markets where it does drift down a little bit more over those periods of time. When we come in with greed and fear, and especially greed going into extreme greed, that can also be exacerbated, which is something that's happening right now. And it brings us to talk about some of the options that are going on. So let's have a look at some of the unusual options activity from Friday. It was another couple of strong sessions for certain things. We saw a lot of calls still on Tesla, so that was a bit of a battleground in stock. Some interesting ones that have been coming through recently, Zoom video comms. That's actually got a pretty interesting base on it. We also saw PayPal coming out with some pretty nice, unusual options activity. That's been one we've been following. And Broadcom also started its sell-off here a little bit more. All of the AI and all of the semiconductor stocks getting really smashed over the last week, and something we will be looking at later in today's video. More importantly, though, we still have the reflex of a down day being heavily bought call day. 55% calls, 46% puts. Well, I guess that should be actually a little bit wrong there. 45% puts. But it was slightly down on normal options volume over the last 90-ish days. Let's move over here to the SPY. What have we got going on? A lot of 0 DTE trades, a few into this week, but notably as we refresh there. Notably, there were a few larger puts put on. You can see here IWM puts on 172 for August. That's going to be an interesting read, whether that's actually setting up here. And you can also see a few other little sneaky large August positions being written for. 12 strike, currently trading at 433 on the puts here for the SPY, and it keeps going on. There were a couple of larger trades placed for the put side more than the call side moving forward, and they were a little bit underneath the strike. Could that be setting up for a bunch of zero DTEs to push it underneath? Well, I think we'll need some trigger points that we'll talk about later on today's video. Here are Tesla's two big positions here were the puts up the top. Were they right? I'm not too sure, but they certainly were there. Nvidia also had a relatively large position put on it in comparison to the others. Amazon also getting a bit of trade here, and usually the main kind of big positions have been placed through. So we've had more of that kind of SoFi, Intel, PayPal, those types of ones coming in. Let's look at rotational switch. This is something we always talk about in the markets. Have the market shown us that they want to go defensive? Well, I would say this. Over the last 5 days, the best performing sector at the moment is healthcare, and the third best performing sector at the moment is consumer staples, utilities in the middle of the crowd. So what that's showing you is that pretty much, yes, markets have moved into their defensive sectors. They're getting ready potentially for that type of sell-off to mean reversion. And you can see that again here on the Friday trade with gold, healthcare, staples, etc. being some of the best. Notice semiconductors have been sold off pretty heavily, and actually utilities got bashed through that session a little bit more than others. Just to go back here and just to show you, semiconductors often leading and technology were some of the weakest markets along with clean energy. So you can see here all of those leveraged running positions, they sold off very heavily over the last week. So just before we jump into the hottest charts for the week ahead, and boy, oh boy, there are some, I want to say a big thank you to the sponsor of today's video, which is Tiger Brokers. Zero fees, zero worries. Yes, as Tiger Brokers go into New Zealand, it's time to listen up, especially if you're from that area. For anyone else, check out the special offers down below. There's always a whole bunch of them. But if you're from New Zealand and you fund with as little as New Zealand $2,000 over the next 7 days from application, you'll be able to get not only an additional $50 of Microsoft stock, but also zero transaction fees for life 4 times every month, US and AU shares. It's pretty good to be a New Zealand audience member right now, but of course, why would you want to check out the platform from anywhere around the world? It has to do with updates to the apps, updates to all the platforms, and more importantly, a focus also on the desktop. I think that's been underutilized over the last couple of years as everyone goes to press buttons on their phone. I'm a bit old school. I love to use the desktop platform. I'd be interested to see actually how many of you use the desktop platforms out there. I know I'm certainly one of them. And of course, having the ability to have all of this information at your fingertips is important. Here we've got some fundamental analysis. You can see here one-click trades with, of course, the level 1 and level 2 data opportunities and all of the stuff to do with the platforms itself. The thing I really like about the platform, though, is the ability to be able to go into any particular market that they offer, such as the US, click on it, go over to all of the market overviews, and then possibly also see the most popular stocks traded at any time, along with, of course, the most popular sectors, which is something we always talk about. You may have seen the heat map discussed. That's something we certainly like to talk about here on the channel, and it can help you to understand that there are markets within markets. And if you want to trade food delivery apps, here are 2. If you want to trade something like transactions and payment processing companies, here are all of them. Great to be able to just instantly see that rather than searching the internet, wasting hours and hours. If you're interested, check them out in the links down in the description down below. And of course, it does help support the channel, so thank you so much. All right, let's jump into the charts now and take a look at some of the big combos we've been using. This is one of them. We're looking for mean reversion on this combo, which is of course everything, the Magnificent 7, what's been running these markets up. At the moment, we just found the same equal high. Have we seen a sell-off? The answer is no. Have we seen any swing trades yet on this market? The answer is no. So it technically is still bullish, and we have not seen anything to do with the mean reversion. Just to measure this and to give you an idea, from the top to the low here is about 21.48%. It's bordering on one of the biggest movements away from mean reversion that we've ever seen. Now, if we go down to the daily, we don't have too much switch trend up here. And you can see, again, We do have a higher high put in, but we have no real turn points. I'm liking to get rid of probably Tesla and Nvidia at the moment from this combo. I think it places, it's called Magma, and it makes a little bit better code. But I just wanted to show you here how exceptionally big this run is and where the gaps are. You know, these types of things here, if you take a look back on the weekly, you can kind of see that that would push down more to the mean reversion. So that shows you how hot this market is. What about the VIX? Well, the VIX is still very low. In fact, it hit a 13 this week, going underneath the 2020 lows, and the VIX has been very suppressed. Volatility is suppressed, but at the same time, if you add the volatility of the volatility, which is the VVIX, you'll notice that that's been spiking up over the last 2 weeks. So this is something that's a little bit more important. The volatility underneath the hood is actually accelerating while the markets are kind of just like floating around in this trapped zone. Speaking of volatility, the skew got crushed last week, and I mean crushed in a big way. That's usually a great sign that bears are back in town or that they're floating around, because we know that this is often considered the black swan indicator. My guess is that those heavily leveraged shorts were forced to wipe off. The costs were super involved. It's dropped. That's usually a good sign that potentially something might be happening around the next coming weeks into the next month or two, which fits very well with that Q3 kind of scenario. PCC, put call ratio, you can see here the PCC is pretty low. Again, that just shows you the rebounds here. Every single time it drops, the current reaction is buy the dip, and calls are all over this particular market at this point, and the PCC has been showing that. Again, that's kind of good for bears. What about the bonds market? Well, we're back to talking about junk bonds again. The junk bonds have been down 1, 2, 3, 4, and 5 days in a row. Pretty rare, actually, to see so many junk bond days selling off. They're not huge moves. Of course, we've seen this before, and we've seen this over here. And in both times, it led through that February sell-off. Well, look where we are right now. So again, if junk bonds continue to go down and the stock market's hovering, if these dropped off significantly, you could use them as a bit of an early indicator. What about the idea of demand destruction? Well, copper held the supply. So basically, the bears won on copper last week, and they sold it down. I would expect at this point rallies on copper to be met by sell demand, as what this really is it's China's stimulus not living up to the market's expectations. They're saying, well, we don't really trust that this market is necessarily as healthy as we thought. We've talked about the CQQQ a few times, how it's come back into an interesting area for longer term investors. But as you can see here, it looks like everybody's lost faith in the markets. And of course, these are always dangerous, especially in the geopolitical times we live in, which I'm pretty sure has been highlighted by everything that went on this weekend if you've been paying attention to the news. What's another positive sign for bears? Well, it has to do with central bank liquidity. Central bank liquidity dropped off drastically this week with some of the underhanded little sneaky plays that the Fed does. Dropping off pretty hard. We've already talked about how far away the Qs are from this. So if we load up QQQ, you'll be able to see here the significant level away now the markets are at. And it is, I believe, the most away that I've seen it in 3 years. So this is incredibly extended. Does it mean the market has to sell straight away? No. But with so many gap fills underneath, it certainly brings to question whether you really want to be a strong buyer around these zones, unless you have, let's say, some type of day trading plan or even miniature kind of swing trading plan. Long-term investors probably don't care, but the shorter date ones, the ones that are trade vesting, you might need to be paying attention. Speaking of paying attention, this is the week of Bitcoin because, of course, we saw a big shift here on Bitcoin versus the NASDAQ. It's jumped out. Bitcoin's been moving super heavy through the weekend. I'm looking for it to close above 30,500 on the weekly. That's not over yet because, of course, the weekly will end as of the Sunday close. But we're seeing markets really push this rhetoric. And if Bitcoin can get past 30,600, I wouldn't be surprised to see Bitcoin actually move towards 40,000. And I've been pretty negative on Bitcoin. I've obviously talked about 24.2. We got down to the 25s. We busted this high. Once that happened, well, what can you do? It's pretty much over. And the market's going to go towards the next level, which in this case is 30,500, 29.5 to 30,500. So we're hovering around that area. We're interested to see what happens next. No confirmations yet, but stay tuned to the channel. Make sure to subscribe if you're interested in those markets, as they are getting quite interesting, especially with geopolitical tensions out there. The US dollar looks really strong. It closed a very nice weekly bullish candle here. You can see it came down, took the lows, hit our interesting bull zone, and actually spiked that thing really hard. So very nice level. I'd like to see some weakness in the dollar moving forward this week, then into strength. So basically for us to go a little bit of sell-off, maybe come back to this block down here, 102, and then find some buyers. So yeah, dollar could be a very interesting trade. Certainly looking forward to that one this week. Currencies, I think are getting quite good trades on them at the moment. Speaking of currency style trades, we've got gold here. Now, gold had a disappointing close. The weekly closed very negatively and could lead to further selling, especially if we think the US dollar is getting quite a lot stronger. Daily was faded, so we went back to the supply and faded it back down. We've talked about this 1910, 1900 finding initial buyers. For anyone that's done our day trading masterclass, excellent trade in there, well done. Nice 4-to-1 style trade or better out of the position in here. For anybody else, of course, we now need to find out whether we get a proper swing trade base. We don't know that on gold yet. At the moment, it is still negative. However, it is trading into our first range. Second range would be somewhere around 1800. So if it doesn't hold the 1900 and starts closing below that, well, we could be getting another further sell-off and at least going and filling this area. And I think what would happen is it would do something like this. So be careful in gold at the moment. It's a very critical point. It's where buyers should show commitment soon. But if they don't, we go to the next level of what we call equilibrium. Let's move into the markets, and we'll go here with the sector that most people I think are watching, semiconductors. We talked about semis coming into the highs, into the resistance. They've sold that point. 143 SMH, make sure to have that on your charts. If we get a swing turn here, that should activate mean reversion, I believe, on a whole bunch of stocks. So certainly semiconductors, worthwhile watching, have on your charts, check them out. AVGO, another market that I called into a topping effect after seeing this candle. I expected it to rally, which it has. I now expect it to suffer the consequences of that huge rally move. And I wouldn't be surprised at all to see AVGO further lows over the next coming weeks and months, and then probably lean back into really probably a 680-ish kind of style market to 700 on this stock. I wouldn't be bullish on it personally, but of course, this is it's like playing stats. If you've seen it before and you've seen these types of plays, then you have a bit of an idea. Let's move over to NVIDIA. Do we have the same type of weakness in this semi? Not yet. So NVIDIA is one I'm going to watch heavily over the next 3 to 4 weeks. I think it could get smashed down, but unless it does, it's more of a guess. And the reason I say it could get smashed down is because it's had such a huge rally on it. Eventually, a big fund will come in to try to crush it. And although I would not fight this system, I would not fight this trend, I'm a bull on this stock, I do think it's a little bit overly extended. I'm pretty sure most of you would say a little bit. It's massively overly extended. But look, NVIDIA is well known to go into huge epic rallies. It's done it many times before. Go through the history, you'll go and you will see many epic rallies throughout its history, and then a lot of sideways after that, or even epic sell-offs of the 75% of the rally actually getting wiped off after. We might be in the age of AI, so maybe it's not going to happen, but yeah, we'll be looking for the signs, and I'm going to watch that chart very closely. Let's move over to Tesla. What's Tesla doing? Well, is it forming a head and shoulders? A few of you sent me. It could be. And if we take this low, 247, then we probably are activating swing trades through S&P 500, in NASDAQ, mean reversion, all of those types of things. At the moment, though, it technically is still bullish. There's no real turn signs just yet. And the weekly turned into a long leg doji. So basically, it's at a happy point. It could go to 300. It could also go all the way back down to the 200s. We don't have a proper signal on it yet, unfortunately. Let's move over to PayPal. What's going on here? Long leg doji, like many of the stocks. It's been running pretty well considering. Another one that we mentioned at the start of today's video was Zoom. It's getting a lot of interest. And I think the reason why Zoom's getting interest is not only is the volume improved, but if you go back on the weekly, you can see here, it's at its IPO rate. So basically, Zoom is trading right here. You might hate the stock, fair enough. I've never liked the stock. I called it trash up here and here and here and here and all the way down. But you can see why if the markets start activating bulls again, this could be one of those ones that's a beneficiary. It's had some options activity on it recently that is semi-unusual. Let's move over to the DAX, new all-time highs, then a bit of a sell-off on the daily. No trade here for me. If you're long, that's fine. If you're short, I don't even think there's probably really great shorts here until maybe even 15,700. So it's all-time high trading on the DAX and the European market, which is surprising to me, but this is why you expect the unexpected. XJO is doing more of what I thought, which is, of course, selling off. And this is doing poorly thanks to the copper, and copper really forcing the XJO down. I'd be like to see this XJO to 69.50. This is the Australian market for any Australian viewers out there, and it's looking a little bit weak ahead of this this period. I don't like that candle. It doesn't look good at all. Rally is probably met by sell demand. When we move over to the Russell 2000, you can see it's in the middle of nowhere. So basically, we're at a point here where if it goes lower, we could be going into demand. If it does rally, we could be seeing rallies into sells. Watch 1850, watch 1800. In the middle here, if you were short, you probably do nothing. You just hold the position. If we move over to the Dow was stronger than the other markets, but it's still hovering around this resistance. So supply resistance, whatever you want to call it. It hasn't really done anything. That's why we don't use it too much. Volume flow, now that's actually started to tip down. We've almost got a turn here on the NASDAQ. You can see here the NASDAQ futures volume flow. You'll notice I have highlighted 14,800. I've had this a lot. And you've got multiple bull, bear, etc. signals here on the NASDAQ, but no turn. Look at this annoying thing. It just cannot get underneath this level to activate what you would say is a breach of a proper demand zone. So NASDAQ continues to struggle with any idea of showing weakness. And I would say that I expected it when it came in short on Friday, which basically is this is where it came in short, that you would take the low first and then rally. Now, because we saw the data at the beginning of this video that was quite bullish, if we continue to see buyers commit themselves around here on the NASDAQ, well, we saw the stats. It was 16-1 on the bull end. That's hard to fight with. So you're going to need to actually see here a new low to show you, okay, well, all the other signals are now going bearish. Maybe this is just not a data period of time. There's a good case for both in the markets at the moment. Let's move over to the US 500. As you can see here, we have a big level of demand. And while the market was a little bit weaker in the S&P 500, still no lows, 43.37. We want to see that low. Then we can get a bit of a rally, then potentially further sells. 42.60 also worthwhile having on your charts. And if you scroll down as well, I think the most traded levels around 41.50 are super key. That's actually where the 20 moving average on the weekly or the mean reversion sits at the moment. So if we did get an aggressive sell, this is most likely where the buyers would be in this market, wiping off that entire rally and allowing potential, let's call it, pickups on mean reversion. But for now, we need to break through the first level. At the moment, bulls, what are you looking for this week? I think it's pretty simple. You just need to take this high. So 43.85. If you actually take that high, it's going to be very, very significant. And that's going to probably switch towards bulls regaining control and maybe pushing towards 45, 30, running that stat through the end of July. And then I think we'll probably still sell in August. Let's move over to the calendar for the week ahead. What have we got going on? Well, as you can see here, we moved through CB consumer confidence, 10 a.m. on Tuesday. We keep going down. And we've got Fed Chair Powell being annoying again on June 28th. Fed Chair Powell speaks. What's up with this guy? He just keeps coming out. After, of course, we get Bank of England and Bank of Japan speaking as well. And then we go through the Thursday and we get final GDP and unemployment claims. Generally not a big movement for markets. And then we scroll down to the core PCE price index, which the Fed uses a fair bit. So 8:30 a.m. Friday will also be important. We then go into non-farm weeks or the jobs numbers week after that week. So there's a lot of data. Will it be important? We'll have to find out very, very soon. As always, if you enjoyed today's video, make sure to subscribe, smash that like button, guys. You have a great weekend. And of course, if you want to check out some of the special offers down below, there's a bunch for Australia, New Zealand, and of course, Americans and everybody else around the world. So check them out. Links in the description. Thanks so much for watching.